Hello everybody, this is David from BCX Design, and today I'm going to continue our talk on customer experience and behavioral science. We're going to talk about a piece of the creditor journey that we often don't spend too much time talking about, and this is collections. There was a very interesting study done in January 2019 from Oxford University in the UK that talked largely about how to reduce delinquencies in a loan portfolio. Now, what they found was borrowers that had been more than 6 months delinquent quite often showed a behavior that in plain language is called putting your hand in the sand. Now, what happened was these borrowers become extremely worried and fearful. And what ends up taking place is they avoid opening letters from creditors, they don't avoid opening emails, and they avoid phone calls that comes from unknown sources. And this is purely worry and fear-based response. Now, let's level set this for a second. These are borrowers that have overburdened amounts of debt that are quite far in arrears, that really want to repay their debt. In fact, what the study showed that these researchers completed was over 90% of these borrowers wanted to repay their debt within a year, but just didn't have enough money to do it. So let's talk a little bit about the current strategy that collection agencies and departments often use, which in truth is somewhat fear-based, and I'll give you an example of it. There's a Vice interview or video that took place that talked about the UK's scariest debt collector. He was a big muscle-bound guy, he was bald, he had tribal tattoos all over him place. He was a really intimidating, scary-looking guy. Now, that guy typifies the fear that many of these borrowers have about any kind of communication they would have when they get into this sort of situation. Now, whether it's him or the reminder calls, emails, or SMSs or letters that happen, all of these are fear-based. Whether or not that was the intent of the organization or not, what they largely found in this study was fear-based messaging was completely ineffective. And it makes sense from an emotional perspective. When the borrower is fearful and we're using fearful imagery or fearful reminders to get them to make a decision, they don't communicate. And so this is obviously very bad for the borrower. The creditor organization can do quite a bit to help that person and get them back on track, but the messaging approach that have been taken traditionally in the UK, in the US, in Canada, and globally is just ineffective. So what does work? Well, there were three things from the study that made a whole lot of sense, that worked. So one is to get it early. If you get the borrower with less than 6 months in arrears, there's a significantly better chance that that person will pick up the phone and listen to the call or have some kind of discussion with the lender. The other two were quite useful. The first was empathetic messaging. Here's what I mean by both these concepts. These people are afraid. They're worried. So we know that they want to pay back, but they can't. So here's what we can do. We know that if we give them some hopeful messaging, there's a much better chance of them coming back on stream and paying back their debt. So all we really need to do is get them early and use some nice messaging. This, listen, we'll help you. We'll get you back on track. There's a way. We'll help you. This kind of empathetic messaging stands a much better chance of reducing overall delinquencies. And in fact, there was an American study that talked about reducing delinquencies in mortgage debt that spoke specifically to doing something like this. So what they did was they caught the borrower early and they said, listen, let us help you restructure, or in some cases they ended up offering loan forgiveness. And what this did for the portfolio overall, for the borrower, was the impact of debt restructuring done early using an empathetic messaging strategy done sometimes with forgiveness actually reduced overall actually introduced overall better arrears and better delinquencies. And the silver lining to all of this is the person is afraid and they're worried in part because they don't necessarily have enough cash flow on a monthly basis to handle the debt. So if we can, one, reduce the worry and at the same time reduce the overall burden on the monthly cash flow, the person will end up actually having more cash in their bank account in order to use on things that will give them a little bit more pleasure, which is what we want when we're trying to get a long-term goal addressed. If we want engagement, monthly payments, even if they're lower, can give them hope and can bring them a little bit of pleasure because they'll have small amounts of money extra to spend. So, guys and ladies, thank you so much for listening to me on this topic. I know this is a somewhat somber topic, but this was a really interesting and useful study, very recent, about a behavioral problem that over-indebted people have. There are ways to, one, reduce the delinquency rate in the loan portfolio and therefore improve revenue, which is great, and two, make things better for the borrower by allowing them to have a little bit more pleasure and a little bit more hope in their lives. So I hope this was useful. I've made some comments above to link to the study that I'm talking about. It was very interesting to read, and thank you very much. I hope this was useful, and please feel free to make some comments on your own in the comments below. Thank you so much.